For many families, beef is not a luxury item. It is a weeknight dinner. It is ground beef in a pan, a roast on Sunday, burgers on the grill, or a steak bought less often than before. In 2026, beef has become one of the clearest signs that grocery pressure has not disappeared. This is not simply about a higher price tag in the meat aisle. It begins much earlier. It begins with the size of the American cattle herd. From there, the pressure moves through ranches, feedlots, slaughter plants, imports, grocery stores, restaurants, and eventually, the household budget. According to USDA data, the United States had 86.2 million cattle and calves as of January 1, 2026. That was slightly below the year before. Beef cows were also down 1% from the previous year. On paper, that may sound small. In the beef system, small changes can matter because cattle supply does not recover quickly. A grocery store can change a display in a day. A restaurant can adjust a menu in a week. Rebuilding a cattle herd can take years. That is the hidden system behind the price of beef. When the breeding herd gets smaller, there are fewer calves. When there are fewer calves, fewer animals move into feedlots. When feedlot supplies tighten, slaughter-ready cattle become harder to find. And when slaughter slows or production is reduced, the pressure can eventually reach wholesale beef, retail meat cases, and restaurant menus. This is why the story reaches ordinary Americans. It is not only about ranchers. It is not only about meat packers. It is not only about USDA reports. It is about what happens when a long supply chain tightens before the shopper ever reaches the grocery store. In April 2026, USDA ERS reported that beef and veal retail prices were 14.8% higher than 1 year earlier. BLS data showed the same year-over-year increase for beef and veal. Ground beef was up 14.5%. Beef roasts were up 17.8%. Beef steaks were up 16.1%. For a household, these numbers are not abstract. They appear when a package that once fit the budget becomes harder to justify. They appear when families move from steak to ground beef, then from ground beef to chicken or pork. They appear when a restaurant meal costs more, or when a family chooses not to eat out. And they appear gradually, one grocery trip at a time. The pressure is especially noticeable because beef prices are rising much faster than the overall grocery basket. BLS reported food-at-home prices were up 2.9% year-over-year in April 2026. Beef is not simply moving with average grocery inflation. It is moving far above it. The cause is not a single event. The verified data points to a broader supply problem. USDA ERS said a cyclical contraction of the cattle herd has resulted in tight cattle supplies. USDA NAS reported cattle on feed at 13.8 million head as of January 1, 2026, down 3% from the previous year. USDA ERS also lowered its 2026 beef production forecast by 243 million pounds, bringing the forecast to 25.547 billion pounds. Lower production can keep pressure inside the system. It does not mean every store will raise prices the same way. It does not mean every cut of beef will move at the same speed. But it does mean the supply chain has less room to absorb pressure. The cattle cycle is slow. When conditions push ranchers to reduce herd size, the effects do not disappear quickly. Drought, forage stress, and high costs can influence herd decisions. When ranchers sell animals instead of rebuilding, short-term supply may move through the system, but future supply can become tighter. That is the difficult trade-off behind the beef market. A decision made on a ranch can show up much later on a grocery receipt. By the time shoppers notice the price, the pressure behind it may already be years old. Imports are also part of the story. USDA ERS reported March 2026 beef imports of 599 million pounds, up 19% from a year earlier. For all of 2026, USDA forecast beef imports at 6.109 billion pounds, up 12% year over year. That suggests the United States is bringing in more beef to help meet demand, while domestic supply remains tight. But imports are not a simple solution. They can help fill gaps. They can reduce some pressure. They do not rebuild the U.S. cattle herd. And USDA has also warned that global exportable supplies may be tighter in 2027. So imports may provide some relief, but that relief has limits. There's also a disease risk factor near the border. Reuters reported on May 29, 2026, that New World screwworm was detected in Mexico within 31 miles of the U.S. border. That does not mean the pest is inside the United States. That distinction matters. But it does add uncertainty to a cattle system that is already tight. Reuters also reported that Washington had blocked cattle imports from Mexico for over a year to keep the risk south of the border. For consumers, this kind of risk is usually invisible. A shopper does not see import restrictions while looking at a package of beef. They do not see border disease monitoring. They do not see cattle movement delays. They see a price. Behind that price is a chain of events that can stretch from ranches to feedlots, from border policy to import flows, and from production forecasts to grocery shelves. This is why beef has become an important signal in the broader cost of living story. It shows how household pressure can build long before the final bill arrives. It also shows why grocery inflation can feel uneven. Some prices may cool, some items may stabilize, but one category can still become painful if its own supply chain is under pressure. Beef is one of those categories, and its effects extend beyond the meat aisle. Restaurants that rely on burgers, steaks, roasts, and other beef items face higher input costs. They may absorb part of the increase. They may raise menu prices. They may change portions. They may promote lower-cost items. But the pressure does not disappear. It moves through the system. For grocery stores, beef is also an important item. Shoppers notice it. They compare prices. They decide whether to buy the larger package, the smaller package, or a different protein altogether. For retirees and fixed-income households, that decision can carry more weight. A double-digit increase in a common food category can force trade-offs elsewhere. For middle-class families, beef alone may not define the budget, but it joins a longer list of pressures. Gas, electric bills, insurance, rent, mortgage payments, groceries, debt. Each pressure may look manageable on its own. Together, they change how families shop, cook, drive, and plan. That is the consequence. Not panic, not collapse. A steady narrowing of choices. The beef market also shows why simple explanations can be misleading. It would be easy to blame one company, or one store, or one political decision. But the verified data points to a more complicated system. The cattle herd is smaller. Cattle on feed are lower. Production forecasts have been reduced. Retail prices are up sharply. Imports are rising. Border disease risk adds uncertainty. Consumers are absorbing the result at the grocery store. That does not mean every factor carries the same weight. It does not mean the future is already decided. But it does show a clear chain of pressure. As of late May 2026, beef prices remain elevated. Cattle supplies remain tight. USDA expects limited supplies to keep pressure on cattle prices. Imports are increasing, but they may not fully solve the domestic supply problem. The screwworm situation near the border remains an uncertainty, not proof of a U.S. outbreak. For ordinary Americans, this is not about market theory. It is about whether beef still fits into the weekly grocery plan. It is about whether a family buys the same package, buys less, switches proteins, or skips a restaurant meal. It is about how pressure that begins in the cattle herd eventually reaches the dinner table. That is why beef prices have become one of America's clearest grocery pressure points. The next signals to watch are the CPI reports, USDA livestock outlooks, cattle inventory updates, beef import volumes, and any changes in cattle movement or disease risk near the border. Until those signals improve, beef is likely to remain part of the household cost story. Not because one price changed overnight, but because the system behind that price has been tightening for years.